following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
Yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day out there, safe day. It's a TGIF, folks. Let's make it a great one. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We have the Dow Industrials up 55, Nasdaq's up 20, S&Ps are up 2, gold contract down $1.70 at $1,076 an ounce. Silver down 13 cents at $14.09 an ounce. Platinum off $1 at $8.53 an ounce. Copper down 3.5 pennies at $2.04 a pound. Light sweet crude trading at $40.39. Light sweet crude, folks, is trying to make that break of $40. I suspect next week we're probably going to get it. King bonds, the 10-year down 2 ticks, 126.22. 30-year down 9, 154.13. King dollar 541 ticks, traded at 99.60. The euro is down 79 at 106. And the yen is trading 122.87. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Can you spell failure on price and volume on option expiration day? Well, we have it all out here, folks. You have it on the daily. You have it on the weekly. It's right across the cards. It's pretty wild, actually, man. So, and by the way, it's really tough to get low volume on an option expiration day, but that's exactly what we're going to have. So let's start with the SPY. What do you have with the SPY? SPY today goes to $210.12. Testing its benchmark of November 9th. The November 9th last downdraft, we started at 209.45. We had 131 million shares traded. You go downtown to 206. What do we do out here today? You get to 210.12, can't hold price, not going to have the volume, which is a mind blower. Bottom line, you get a failure happening in the daily, on the weekly. Now, that benchmark that we're talking about on November 9th, folks, okay, that is the minor benchmark. The actual benchmark is still where we have the 3 black crows from the August time frame. The August time frame, when you start dealing with the August time frame, you're not dealing with 33 million, I believe. Yeah, you're not dealing with 131 million shares. You're dealing with 194 million shares. Bottom line, market has zero strength. They're sucking them in, taking their bread, and they're going to flush them down the toilet. Let's go take a look at the NDX 100. What do you have with the Qs? Same setup in the Qs. What you have with the Qs is this. Qs go to 114.57. The high of November 9th is 114.51. You're trading at 114.22 right now, and this is a mind blower. We've only done 15 million shares in the Qs. That's like insane, okay? I mean, the Qs are going to have to do 15 million shares in the next hour. You know, we bring this back to Wednesday. Wednesday, you did 32 million shares, which is still not enough, by the way. Yesterday, you did 26 million. Today, you did fill 15 million. Failure on price, failure on volume, all of the above. Pretty amazing, man. I mean, it's just, the market never ceases to amaze me, but this one's a good one. Now, intraday, okay, if you want to see something that just happened intraday, which is pretty wild, is, and this company's got big problems now. Chipotle, Chipotle, folks, just went down 10% intraday. It's down $53. You're trading at $5.57. It's a monster ABC down. Okay, so what you have, Chipotle's off its highs of $7.57. What we just did here is that we broke a very large B point. The A point on this is $6.69, which was generated after a gap down. $6.69 is your A. Your B point is at $5.79, so it's a 90.8 to B. Your C point is $6.14, which gives you $5.24. We put this back on a monthly basis. On a monthly basis, what you're going to see that's screaming out there, this equity wants to trade down to $3.22. It's a huge problem, man. It's a huge problem. And so that's the technical setup. The fundamental setup is they got big problems. Intraday out here today, the CDC came out, and bottom line is that it looks that the E. coli strain, which is getting people sick, didn't have to do with just a couple restaurants. What it has to do with is a source ingredient of a common meal item that is served at Chipotle. Okay, so bottom line, they are toast, literally. Pretty wild. Gold market. Let's go over to gold. What do we have with gold? Gold out here couldn't hold the bid. You had gold get up to a price point of $10.87 today. At least they couldn't croak it. Bottom line, you're trading at $10.75. I would have liked to see a little, I definitely want to see more volume. So what this sets up is that gold's going to, basically try to push into this at $10.74 again next Monday or Tuesday. King dollar, let's swing right over to King dollar, because what we had with King dollar is this. 29,000, not bad. It's holding price though. Okay, so King dollar. King dollar is at 99.62, and what King dollar has done is this. In the past 10 days, you had two separate days that you did come down on some volume. We did 44,000 contracts when it went from 99.39 to 98.50. You make a higher high with 32, and then you come off that with 39. You're up at 29 today, but it's holding price. So that's like, you know what? That high is going to get tested once again. Bonds. What do we have with the bond market? 10-year bond. Sideways move out here today. You did 800,000 contracts. Not bad. It's hanging at the highs. The 10-year's not telling us much. The 30-year USZ 5. The 30-year did take out the swing point yesterday. Took it out with volume. 30-year wants higher price. That continues to say that the rates are still going to continue to go lower regardless of what the Federal Reserve wants to do in December. Our phone number is 877-927-6648. So the benchmarks are out there, and those benchmarks, by the way, folks, we get 45 minutes into the close. Those benchmarks are also going to be the benchmarks on the weekly basis. So we have thus far on the weekly basis also is that this week we've done 517 million versus 550. Which is not that bad, actually. That's on the weekly on the SPYs. We take a look at this on the Qs. What you have with the Qs? The Qs much weaker. 139 versus 175. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials up 75. Nasdaq up 25. S&P's up 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And if we take a look at, once again, the number of equities that are just falling out of bed in an extraordinary way, each day it just keeps happening. And, you can make the argument that the indices are at highs. That's a good argument to make, too. There's no doubt about that. If we take a look at the cash S&P, this cash S&P is trading out here at 2086. You take this back and, bottom line, the high is 2134. We've been at the same level, by the way, since December of last year. Now, that you can make that argument. That's the bottom line. The argument that it's going to be harder to make is that when folks, and they're probably, I'm sure they've already got October's statements, there's going to be plenty of folks that get their statements and say, hey, bottom line is that the market's flat. Why aren't I flat? Why am I losing money? They're losing money, folks, because it's only maybe 5 to 10 stocks that are keeping the trade-weighted averages at highs. Out here today, Mentor Graphics is down 34%. That's down $9.50. Nimble Storage, this must have been just a pure ripoff. I'll go over this in a second, but Nimble Storage, they brought that public. That's down 50%. That's trading at $10.21. That went public about a year and a half ago at $21. You got American Woodmark down 9%, $6.35. BioMarlin's been getting hit for a long period of time. That's down another 6%. You get America's Carmart down 14%. Yeah, Chipotle, we just talked about, that's down 9%. You have Synopsys down 8%. PDC Energy is down 6%. Linden Tree's down again. Linden Tree's down 3%. You got Akamai Technologies down 4%. On the upside, Valiant was the leader yesterday on the upside. It's the leader again today. That's up 7.5%. Horizon, that's a triple. You can't count that. The bottom line is that you just don't have equities that are up 15, 20%. You have that dramatically on the way down. We go take a look at some of the. There we go. We go take a look at the good old Apple. Apple is what started the week out, given the market, some good juice, giving the NDX some good juice. What Apple hasn't been able to do is that when this gap down on the 9th of November, the top of that gap is 120.05. Apple got to 119.92 today. It's at 119.51. Just doesn't have the juice. You know, you're going into a downdraft, by the way, out there, 59 million shares. You've done 29 million. And by the way, that's not the benchmark. The benchmark is 124 million. So you get Apple coming into 124 million supply line with 28 million shares today and its option expiration date. Pretty intense. Okay, now let's go over to the gold market. XAU, HUI. XAU out here, we're down $1.88. Still having a hard time catching a bid. You know, we got a bid out here yesterday. We got zero follow through. And on the weekly basis, we're going to get we're going into a week with 155 million shares. Now, the cool thing is that, yes, you're going to have lighter volume, but you're still hanging at these lows. That's a problem. You know, the XAU, 42.72 is the number. We hit 43.35. If we take a look at the HUI, the Gold Bugs Index, what we have inside the Gold Bugs Index, that's down $5 today. We put this on a weekly basis. Let me see what we're going into here. So we're going into 84 million. That's going to be dangerous. We're going to be doing about 84 million by the end of today. We hit a low of 102.96. The low was actually 101.28. So that market is still teetering at those lows. The oil market, let's go to oil. We take a look at oil. You know, it looks like we have the first snowstorm coming in, folks, into the Midwest. And not that that will move oil, but the cold weather will definitely get heating. Let's see. First, we'll go to oil versus, there she is, versus the heating oil. The barrels of oil first we're going to. So barrels of oil thus far, this is where we're at. We've done 409,000 contracts. Yeah, way too much, man. This is going to be, you know what? It looks like, folks, it looks like oil next week is going to blast down under this 41.21 area, and it has the juice. It was pushing down into that level today, and it has some real juice. And our man Frank from Gloucester is going to be spending a lot less money heating his house this year. Frank, what's going on?
Hey, I'm spending a lot less already.
I know, man. It's pretty intense. You know, when we talk about the oil contract, folks, that's what I always quote every day. But if I go to the actual heating oil for all you folks in the Northeast and the Midwest, this broke out its August lows, and it did that November 12th. You know, the August low is $1.44 for heating oil. You're at $1.39 right now. It looks like it's going to break it again. So that's great news for you guys. That's so expensive, man. I mean, well, you use so much of it, right? That's what it comes down to.
In the cold months. Yeah. People down here are still wearing their shorts, Tom.
That's good, man. I like it. Everyone should have their shorts on.
Hey, I want to take a look at Franklin, Nevada with you, and I can't figure out whether it's an ABC up or down. And I was wondering about your thoughts on gold in general, whether if the market goes down, whether the gold miners would follow it down this time.
Yeah, no, I'm with you. So I like what's happening with Franco, Nevada. Now, this is why. So what happened, folks, is this, is that when we talk about either catching a bid or not catching a bid, right? Franco, Nevada, well, it's done two different things. When we came off the lows of September, Franco, Nevada was trading at $39. It went from $39 up to $55. So nice expansion on the way up. You're talking, what, $40, $15? You're talking about a 33% expansion on the way up, right? Now, that being said, guess what? You know, we went from $55 down to $45. Okay, so then it goes 20% down. That correlation, however, is that you didn't get to your lowest swing points. You know, you did a 0.618 retracement, almost to the T, on the way down. And then what we did is this, and this is the kicker. It's what it did yesterday and today, folks. Yesterday, you go higher. And, you know, we got up there yesterday with 633,000 shares. You pull them back today, and you pull them back with 530 thus far. So we'll do about 550. That's what you need in order to bust through. It's going to take a lot of strength and a lot of building of cars to go through this November 5th, because that came down hard, man. That was coming down 1.7 million.
Yeah.
So when this was trading out here this morning, my son and I, folks, do a program every trading day now at 10 o'clock. I like how that's what you need for higher price. You need to pull back. Same with AEM. Like AEM's pulling back with lighter volume. Now, that being said, Frank, more than likely, they're going to give us more grief next week. And I suspect they'll go into those lower swing points of the 17th of November. And the reason being is that the way that dollar is set up right now, it's like, man, that's not done yet. You want to hang a second? Frank, you want to hang there for a second?
Sure, I'd love to.
Awesome, man. Stay right there. This is Frank from Gloucester. Tom, we want to hear from you folks. Our phone number is 877-927-6648. Dow's up 72, Nasdaq's up 24, S&Ps are up 4.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 79. You get Nasdaq up 25. S&Ps are up 5.5. And as we do each and every Friday at 30 past the first hour, we go over to our man, Mr. Steve Rhodes. Now, don't forget, folks, at TFNN, Monday, Wednesday, Friday, we do 9 hours of live programming. Tuesday, Thursday, we do 10. We go from 8 o'clock in the morning to 5 at night, Monday, Wednesday, Friday. Tuesday, Thursday, 8 till 6. You can get all of that right on your cell phone, tfnn.mobi. You want to get Tiger TV, just go to tfnn.com. You're going to see Watch Tiger TV. You hit it right there. Our man, Mr. Steve Rhodes, has an outstanding show on every trading day, 1 to 2 Eastern Standard Time. Get it right on your cell phone. You can also test drive his newsletter. Master in Probability, great newsletter. You come over to our website at TFNN. You're going to hit newsletters, trading newsletters. You hit Master in Probability. You can test drive it 1 month absolutely free. Steve Rhodes, what's going on?
11 points, baby. 11 points. Since January 2nd, the first trading day of the year, that's how much the Dow has moved.
Oh, that's a trip. You mean January 2nd of 2015?
January 2nd, 2015, we opened at 17,823. We're at 17,811, 812 right now.
That's a trip, isn't
points,
it?
Huh?
Yeah, I know.
It is. You know, we've had a couple of years like that. The closest, now, obviously, we haven't ended the year yet, but in 2005, January 2005, the actual open there was 10,783, and the close was 10,717. So we'll see how this year ends, but it's been a trader's year, not a investor's year.
Well, that's a fact. There's no doubt. And inside that context,
with an exception, you said there's a number of stocks that are moving the market, and if we just went and took a look at the top 10 stocks for folks that are watching us on Tiger TV, if we take a look at Apple, we can see some movement there. If we take a look at Microsoft, and this chart here is just these candles that we're looking at are yearly candles, so you can see fairly good move inside of Microsoft. In the top 10. Equities within inside the NDX 100 represent 51% of the weighting. Take a look at Amazon. I mean, that's a that is a monster move out there. Facebook, if we take a look at Facebook real quickly, another monster move out there. Intel, I think, has been one that hasn't had a tremendous move. Yeah, so it really hasn't done too much, during the year. I think you've got Gilead is another one of those equities that make up the top 10. But hey, that's done pretty well, even with different pharma biotech companies getting hit. So you are right. There are a handful of stocks, more than a handful, but there are some stocks that are really keeping these markets moving. But, speaking about the Qs, last week at this time, we were taking a look at the island top that had formed, because last Friday we had the markets gap down, the NDX had gapped down, and it created that island top. And really in a period of since about the end of September through now, we've gone from the death cross, which when there's a death cross that occurs, it gets a lot of hype in the media. And I suppose it's because the media likes to sell fear. And we had that death cross. It was towards the end of September. Last Friday, when you and I were on, the market had formed the island top out there, which is also another very bearish pattern. Now, my expression is there's nothing more bullish than a failed bearish pattern. And this week's move off of the lows on Sunday has negated that pattern. It's closed the gap. Obviously, we're up towards the highs. But what's also really important is, I believe it was on Tuesday, we had the golden cross. And, I don't think I've seen anyone on any of the media shows talking about the golden cross as if it's really not that important. But here, this chart here, this little slide here, dates back to 1990. So I wrote a program that allows me to go out there and test all kinds of moving averages. But if we just take a look at the death cross and the simple cross, and for those folks that aren't familiar with that, what that is, it's the 50-day simple moving average. Most of the times, Tom and I and others at TFNN use exponential moving averages. But the death cross and the golden cross use the 50-day simple moving average and the 200-day simple moving average. And what I did, Tom, was I wrote a program. This goes back, takes a look at the NDX 100 since 1990. And in that time period, we've had 15 golden crosses and 14 death crosses.
Okay.
But the golden cross is the goose that lays the golden egg. Because of those 15 time periods, if we just took a simple program that said, go long the NDX 100 when you have a golden cross and go short when you have the death cross. If you took those long trades, 73% of those were winners. Death crosses usually mark the end of the move for the most part. Only 14% of those were winners out there. So instead of the media really hyping the death cross out there, they really, which is so amazing that it just simply, they're not out there taking a look at that. It's really all about the golden cross. And so we had that this week. And not that it can't fail, but this is pretty good historical information. go back to 1990 and take a look at it. So, folks that would like to understand that or see the details behind it, if they sign up for my newsletter service today, they'll have all of the dates, those crosses. They can go back and they can take a look at it. This is one of the things that I provide newsletter subscribers with. The other types of things that I like to take a look at doing are taking a look at correlation. So, for example, over the course of the last 82 years, Tom, the market makes a bottom sometime in October. This year it was scheduled for October 12th.
Okay.
And thus far, the bottom came in September 29th. So just a little bit ahead of schedule. We use these more like guidelines, as you drive, as you were driving around the city. In this case here, we're driving around the stock charts. And in fact, even in years where we've had down years, and this I'm just taking a look at the Dow. So
okay.
Down in 30% of the time. So over the course of the last 82 years, we've had 25 down years. So roughly about a third of the time. And we're not really in a down year, as you and I just took a look at. We're in a year where it's basically done nothing. We've been parked in neutral. But even in down years, the market makes bottoms into the early part of October, and certainly right as we come into Thanksgiving, so next week. So even if the market does pull back, we've got these odds that suggest the Santa Claus rally came in early, September 29th. The market ought to go higher. If we try to take a look at the year that 2015 is most correlating to, I'd have to say it's 2011. In 2011, we saw the market move down into August. It was the early part of August. In our case here, 2015, the end of August. And if you take a look at this move that we had last week, it really is lining up with the move back in 2011 as well. So that correlation, said that the markets maybe doesn't move much higher. So maybe that little doji-style candle we saw in the Dow, but it also suggests that we really don't go much lower out here. In fact, what's interesting is the market. This chart here takes a look at the beginning of the 2007 top, which took place on October 11th. And then it takes a look at our actual high that we had inside the Dow, which is May 19th, 2015. And oddly enough, the 2 points that line up the most on this chart are the August 24th bottom and the one that came this week here. So, this is also, even if the market is going to tip over and we go along with this correlation, it looks like it moves into the end of December. So it just follows that Santa Claus pattern. So Golden Cross, it laid the golden egg. It did it this week. And looks like Santa has arrived early. So I'm going to wish everybody a happy Thanksgiving.
Oh, boy. Get those bullhorns out, man. Nothing like it, man. Listen, folks, come over to our website at TFNN. Go to newsletters. Go to trading newsletters. Can test drive Steve's newsletter right now. 1 month, absolutely free. You have a great weekend, safe weekend.
You too,
we
Tom.
look forward to the show Monday, man.
Sounds great.
Cooking, brother. Have a great one, man. Have a safe one. You stay right there, folks. We'll come right back with our man Frank from Gloucester. Dow Industrials right now are up 90. Nasdaq's up 27. S&Ps are up 6.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 86. The Nasdaq up 28. S&Ps are up 6.5. We got our man Frank from Gloucester, and we are talking gold. Frank, thanks for holding, man. Appreciate it.
Sure, Tom.
Okay, so we go over to the gold contract, and, I wouldn't be buying it here. That's the bottom line. What we have out here today is this. You get to a price point of 1,087. You do 140,000 contracts. Yesterday we got to 1,086. We had done 178,000. Now, what I would have loved to see is that we did more contracts or held price. We did neither. So it's like, man, you're gonna. To me, that means that they're gonna hammer the 1072 to 1062 next Monday, Tuesday, or Wednesday. And what I expect you're gonna see here, folks, and this is what's gonna be just. You're coming into a Thanksgiving week. The holiday is actually starting today. That's how this, in my own head, that's how this market more than likely will go. If we go back over to the dollar for a second, the dollar looks to me like it's almost done.
Sure.
Will it do a 1 to 1.382? It can, because it held price today. It can do that. If you're looking for, I can tell you, if you're looking for a couple of gold stocks, the place to look, and I wouldn't buy it yet, is Goldfields. We don't own it yet. We had owned it, got stopped out of it.
Yeah, I do.
You own it?
Yeah.
Oh, that's good, man.
Yeah.
Okay. So this is it. What happened with Goldfields, folks. Okay, Goldfields in the U.S. I'll show you something here. It's really cool. In the U.S., it had broken all lows. But what I like about SJ, about these South African equities, is you can go and see how they trade in South Africa. Well, so that's Rand dollars versus U.S. dollars, folks. The reason that's important in the gold market is gold companies in South Africa, any company in South Africa, number one, they have to change all their whatever the currency they have into Rand dollars within 90 days. Largest corporation in the world. In Goldfields' case, they get paid U.S. dollars because they're in the gold business. Then they changed them. Well, bottom line is that Goldfields was testing its low, dramatically lighter volume, hadn't broken the low yet, and then all of a sudden they come out with numbers. They actually made money, which is blowing everyone's mind. And you had that surge forwards. Goldfields is 3,600 Rand in South Africa, October 5th. It wants to go to 42. So now watch. You do the correlation and come back to the U.S., and you come back to the U.S., you're at 247, and this thing wants to run up to 312, And if you don't own it, folks, just wait for it. It's acting correctly. Yesterday it went up with 9.7 million. Today you're backing down with 3.3. I expect, this gap will almost get filled, but.
You think so?
Yeah, I think we'll back down. But in your case, I wouldn't get out of it. It's not worth getting out of it, man. It's not worth getting out of a $2.47 stock. Do you know
Right.
what I'm saying? It's just not. Because two different things have happened with this, folks. You have a high volume spike at 362. You have a high volume spike out here at 313. Now watch this, and this is the reason that we got into this. This setup, man, on the monthlies, and what happens is this: once they get off the lows, folks, okay, you get a better understanding where they want to run to. This thing wants to run to $6, man. You know, you can see the $6 is laying out there from January of last year.
Yeah,
And
what's
you can
amazing to me is, well, you're going back with this last swing low the other day. You're going back to 2001.
Yeah. Oh, it's disgusting. I know.
And the prices are still relevant in 2015, is what your system says, right?
Right. Right.
It's a little tough to swallow, but it's
I
worth.
agree. Listen, I know, man. This one here was a mind blower, man, particularly because, you know, I think you get the gold report, and I was explaining there that, hey, listen, man, South Africa, you know, this is what's going on, but we're going to wait for a sign of strength, you know, in the U.S. Because it was stating in South Africa.
Okay, you wait. I'll be there when you get there.
That's a beautiful thing, man. Hey, you have a great weekend, safe weekend, man. Look forward to speaking to Charlie.
Thanks very much.
Thanks,
Take care.
man. Have a great one. Now, let's go over and take a look at Harmony. And Harmony, folks, okay, you know, this thing's not a buy, so don't go out there and buy it, okay? But what I go back to South Africa, HMY. No, it's HAR. HAR was South Africa. HARSJ. So we look at Harmony, and yeah, see, Harmony hasn't broken that low in South Africa yet either. One second. We bring this back. And what the correlation here, so it's going into, yeah, don't buy Harmony. You need a sign of strength in Harmony in order to buy it. So the correlation goes like this, folks. They get paid in U.S. dollars. Their expenses are in Rand dollars. While the Rand is trading at $14 Rand dollars to one U.S. dollar. That is about as weak as you can get. You know, when gold was at its highs, the Rand dollar was 6.5 to 1. Okay, so the correlation, picture how this correlation goes. The Rand is worth half the amount. Now that would be a problem if, in fact, if your expenses were in dollars versus Rand. But guess what? Their expenses are in Rand. They have 46,000 employees. So their expense ratio is down 50%, 50%. Well, we know gold's not off 50%. So they're still getting paid U.S. dollars. So watch this correlation. This is pretty cool, man. I love it when there's a couple more, you know, pieces inside these pies, and you have this in the gold market, which is pretty cool. So if we bring this back, so picture, gold is at 1,076. At the highs of 1920, the currency was cut in half. You can make the case that, hey, we're only at 2,200. Well, 2,200 is better than 1920. 2,200, so watch how this works. That's $280 an ounce, right? Now, this is the kicker, though. At $280 an ounce, the South African companies, folks, they don't make a lot of money on a basis year to year. But what they do is that they still are the largest miners of gold, meaning they have, per year, you're talking 2 to 3 million ounces of gold. That's how this thing shakes out. That's what the correlation is. So bottom line, we'll see where it shakes out. Franco-Nevada, I like how that looks. Royal Gold has problems. You know, Royal Gold, that little baby has some big problems. Not quite sure, well, technically the way it's set up right now, you're at $35. This thing came down hard. It broke the swing point from June of 2013, broke it with volume. That baby is set up, man, it's set up to like go to 22. So it's like, man, what the heck's wrong with Royal Gold? We go take a look at the silver market for a second. What you have with silver out here, silver banging on its lows out here today. So this market wants to go after its lows next week. We're at 1408, and you have 1390. It's going to go after it. And you can expect a dull week next week. What you can also expect, though, is that they can push the dollar around real easy. You can push the metals around really easy, and we'll push the S&P around. You know, when all said and done, it probably is going to be flat, but the bottom line, that's in the S&P. But the metals and the dollar, different ball game. You stay right there, folks. We'll come right back. Dow up 93, Nasdaq up 30, S&P's up 7.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's just go over these benchmarks as we're coming into the close of the market out here. So, the SPY, your benchmark, it's November 9th. That's your benchmark out here, 209.49. Right now, we're 209.25. We've done 80 million shares, or 79,700,000. Bottom line, you get that close under this 209.49. That's a failure on price, volume, and a failure on the weekly also. And as I said a little bit earlier, that is not even talking about what the actual benchmark is. That's a smaller, minor benchmark. Your benchmark is the August 20th number. That's that August 20th number. You're dealing with 194 million, and you're dealing big numbers. The NQs, 3 Qs. What do you have inside the 3 Qs? 3 Qs, your benchmark, same thing. It's November 9th in all of them. November 9th, the high, 114.51. We've done volume there of 33 million. The thing, it's a mind blower on the Qs, man. I'm telling you, folks. There's no reason that the Qs, couldn't get 30 million shares today. You're talking about option expiration, and what happens on option expiration is this: you have high volume come in at the open, you have high volume come in at the close, but the Qs are never going to do 15 million shares at the close. They're not even going to do 2 million. You know, they might do 2 million. Bottom line, you have the contraction of volume each and every time and day that we went up. We went up on Wednesday with 32 million, and you can remember your benchmark's 33. Yesterday, Thursday, we went up on 26 million. Today you're at 17. Maybe we'll do 20. Can't hold price, can't hold volume, all of the above. The small caps continue to be the weakest entity out here. The small caps, they're way off their highs. You know, the other indices are right next to their highs. Small caps, different ball game. Small caps, the high, and the IWM is 129.10. You know, the small caps are actually trading where the S&Ps and the Dow, NASDAQ are trading at the January levels, so we're same place a year. The small caps, bottom line, that's also a year ago. You know, so they're all basically haven't moved in a year. But as I said a little bit earlier, there's one thing that the indices haven't moved. The equities that are inside these indices, each and every day for the last 3 weeks, we've been getting in the morning equities that, large equities, I'm talking about large cap equities that absolutely just fall out of bed and go down, you know, 10, 12, 15% at a clip. One of the big ones, you know, this week was Qualcomm. Bottom line is that, you know, Qualcomm has gone from a price point of $81 down to $49. You're in the lower range. With the lower range I'm talking about is all the way back into 2008, and it's like, okay, Qualcomm wants to run to, you know, $38, and you're talking about an equity that wants to run to $38 that takes in $25 billion a year. So what does that mean? What that means, folks, is that the stocks are way too highly valued for what they're giving the investor. The biggest one coming up for the Christmas season, man, there's no doubt. And Amazon, I believe, is up a full 100% this year. Amazon's the baby. And the reason that Amazon would be the baby to watch, don't go short Amazon, by the way. But Amazon is something you want to watch, and it very well may be the last stock that croaks. But Amazon is trading at a PE of 1,000. So that means that you are paying to own Amazon $1,000 for $1 in earnings. It's, in volume-wise, folks, you know, this thing wants to, well, this thing, when it pulls back, will have a severe pullback. That's how it likes to trade anyway. And, you know, coming into this season, Amazon has already destroyed, and my take is that they'll continue to destroy retailers, you know, because Amazon's a great deal. There's no doubt about it. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Everything you need is right inside you. Grab it and have a blast with it, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Go for it, folks. Look forward to speaking to you on Monday morning. Go get them, folks.